Welcome to Stocks Simplified. Today, we're distilling the timeless wisdom of a Wall Street legend, Peter Lynch, straight from his classic book, Beating the Street.
Okay, just look at this number for a second. 29.2%. That was the average annual return Peter Lynch delivered while managing the Fidelity Magellan Fund. From 1977 to 1990, he took that fund from just $18 million to over $14 billion. It's a track record that cemented his place as one of the all-time greats.
But here's what's really at the heart of his message, and honestly, it's incredibly empowering. Lynch was absolutely convinced that regular folks, people like you and me, actually have a built-in advantage over the Wall Street professionals.
Right. That's the billion-dollar question, isn't it? How on earth can an everyday investor possibly compete with the best and brightest on Wall Street? Well, Lynch laid out a surprisingly simple playbook, and we're going to walk through it right now.
All right, let's dive in. Lynch's very first rule is all about tapping into a powerful advantage that you probably don't even realize you have. So what Lynch was getting at here is that your own unique experiences at your job, in your hobbies, just living your life, give you this incredible edge. It's what he called local knowledge, and it's something that professional analysts stuck in their fancy offices just can't replicate. So you might be asking, okay, where is my edge? Well, it's not hiding in some complex financial model. It's all about just opening your eyes and being observant in your day-to-day life. Think about how practical this is. Lynch famously invested in Dunkin' Donuts. Why? Not because of some Wall Street report, but because he was a customer and he absolutely loved their coffee. He spotted huge trends with companies like Supercuts or Au Bon Pain just by paying attention to what was happening around him. The best ideas are often hiding in plain sight. But, and this is a really important but, invest in what you know isn't a shortcut. It's the starting line. It's about using your unique point of view to find a promising lead, which you then have to go and research thoroughly. So, you've found an idea. What's next? Lynch's second rule is that you have to deeply, deeply understand the company's story. This is so fundamental. Lynch is basically reminding us that stocks aren't just lottery tickets or blips on a screen. When you buy a stock, you are buying a piece of a real business. So your job as an owner is to figure out what that business is all about. What's its story? And to make this easier, Lynch basically boiled down the entire universe of stocks into these 6 distinct categories. This is brilliant because it sets your expectations right from the start. You wouldn't buy a slow grower and expect it to shoot for the moon, right? And you'd be super careful with a cyclical company if you thought a recession was coming. Each category has its own story. Before he would even think about buying a single share, Lynch would put himself through what he called the 2-minute drill. Could he explain simply and clearly why he was interested in this company? If you can't do that, you probably haven't done enough homework. Okay, this brings us to what might be Lynch's most challenging and honestly, his most important rule. You have to master your own mindset. You know how it is. Wall Street is often driven by a total herd mentality. But Lynch saw this as a huge advantage for the individual investor. If you can just ignore the short-term noise, focus on your own research, and think for the long term, you can gain a massive edge. Look, market downturns are going to happen. They are inevitable. The real danger isn't the dip itself, it's the panic selling that always seems to follow. Your temperament, your ability to stay calm when everyone else is freaking out, is one of your most powerful assets as an investor. And all of this, it all builds up to Lynch's final, and maybe his most powerful principle, the importance of long-term conviction. Lynch loved to point out this fundamental truth. In the short term, a company's success and its stock price can feel like they're on 2 different planets. They can seem completely disconnected. But over the long haul, he was convinced that correlation becomes 100%. A successful business will eventually have a successful stock. And that gap, that disconnect, is where the real money is made. Lynch stressed that his biggest winners, his legendary 10 baggers, often made their greatest gains in the 3rd, 4th, or even 10th year he owned them. Patience isn't just a virtue in this game, it's an absolute requirement for big returns. And really, it all comes down to this simple, brilliant idea. Find a story you can understand, do the research to prove that story is actually happening, and then have the conviction and the guts to hold on while the rest of the market catches up. That is how you beat the street. And that's our breakdown of Peter Lynch's core principles.
If you found this helpful, do us a favor and hit that subscribe button for more deep dives into timeless investing ideas. Thanks for watching.